The next week, the week of December 22nd, will be a short week and the market will remain operational only for 3.5 days. And because of this, the short week, there are very heavy chances that the stock market will go bullish, will trade bullish. However, there is a catch. This catch is because of the formation of the special candles on the weekly chart. And those candles are indicating some bearish movement in the market, but the short week is indicating the bullishness in the market. So both the bearish and the bullish conditions can coexist in a manner just like what we have seen in the recent week. And the most important part of this, the movement in the last week, especially the closing that was on Friday, it was at 6834 and this closing was above the 682x level. But the most surprising thing that was seen yesterday was the open equal to low condition in the S&P 500 and the Dow Jones. So it was very much clear that because now there is the open equal to low condition in the market, so the bearish side will be limited. Okay, bullish side will be there, but the bullish side will also be limited. But the bullish side will be limited to the 682x. That even if the S&P 500 breaches the 682x, it can trade in the 683x, but will fall back to the 682x. And this is because that on Thursday, after these continuous bearish candles, on Thursday the market sustained, but because there was the zone 676x, and exactly the same was mentioned here in this update, the zone. This is the zone. As long as it is holding and sustaining and hourly closings above the zone, it will sustain and sustain no matter what. But the most important part of the shortfall in the market is that there was an obligation that was pending. Okay, this obligation was to the 672x level. This was pending for some time when it started to move up. But on Wednesday, when there was very heavy fall in the market, the S&P 500 came down and tested the 672x level, the obligation. It has fulfilled this obligation. And it was actually the Dow Jones that has helped, because initially the Dow Jones was trading in the open equal to low condition. Once it came out of the open equal to low condition, then S&P 500 came down, heavy selling, it hit the 672x level. Now this thing or that thing, bullish, bearish, manipulated, not or non-manipulated, doesn't matter much. Why? Again, because of the short week, the market is expected to remain bullish, but there is a catch. That is because of the weekly chart. Okay, so all of this, the bearish bullish movement, the weekly chart, okay, there is the catch. I will tell you in detail in this S&P 500 weekly technical analysis, which is for the week of December 22nd. Means from December 22nd, which is Monday, to December 26th, that will be Friday. Now guys, let me tell you that I have divided this S&P 500 weekly technical analysis in two parts. The first one is the technical part. I will show you the weekly and the daily charts, the technicals, all of that, and also the catch. Okay, why we are still anticipating some bearishness, okay, in the market. And the second part is the probable movement. In the probable movement, I will tell you that what will trigger the bullishness, what will trigger the bearishness, whether the fall will be recoverable or not, or if it moves up, then at what level it will fall. All of these conditions in this the probable movement section. So now I will begin with the first part, that is the technical part. But guys, before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And guys, if you want to get these daily precise updates every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now guys, I am going to start with the weekly chart section. Okay, the technical part. The first point of the agenda is the technical part. In the technical part, there are the two charts, weekly chart and daily chart. First, I will cover the weekly chart, then I will cover the daily chart. Okay, so this is the weekly chart. Weekly chart means one candle represents 1 week, not 1 day or 1 hour. One candle means 1 week. Okay, now if you notice this, the last candle, there is very heavy bullish retrace. Very heavy bullish retrace. The low was 6720 and the closing was 6834 and the high was 6861. Okay, very heavy bullish retrace. Now even though there was the very heavy bullish retrace in the market, But the pattern that is there in the market, this pattern, as long as S&P 500 was holding, sustaining above the 6,800, this was the bullish condition. But when it lost the 6,800, came down to 6,720, and on the daily basis, it even closed below the 6,800 on 2 consecutive days, Wednesday and Thursday. Okay, so pattern and all of these conditions are indicating a gap down open on Monday, or irrespective of any open and initial or intraday bearish movement on Monday. Okay, this, the candle is indicating this thing, right? Now the last weekly candle of the Dow Jones, well, it's a good bearish candle. However, the closing of the candle is still above the open price of the previous candle. Okay, so it is not indicating any gap down open. It is simply indicating an initial or intraday bearish movement on Monday. That's it, nothing much. Okay, no heavy bearishness. This is still in this the bullish side, in this the bullish movement. Okay, so just an initial or intraday bearish movement on Monday, but no gap down open. So considering the outcome, these the candles, okay, it is clear that now on Monday, irrespective of any open, okay, gap down open is seen through the S&P 500, but irrespective of any open on Monday, there will be an initial or intraday bearish movement. Okay, clear? Now technicals. In terms of the technicals, the S&P 500 is bullish through the moving averages, Bollinger Bands, and the Ichimoku cloud on the weekly chart, and the S&P 500 is still trading bearish through the MACD on the weekly chart, is still bullish through the stochastic RSI on the weekly chart, is neither saturated nor overbought. But here the most important condition is, but before that, let me also cover the Dow Jones, then I will tell you this, the very important condition here. So in this manner, the S&P 500 is now 80% bullish on the weekly chart. Okay, now for the Dow Jones, if you notice, Dow Jones is also bullish through the moving averages, Bollinger Bands, and the Ichimoku cloud on the weekly chart, and the Dow Jones is bullish through the MACD as well as the stochastic RSI. In this manner, the Dow Jones is 100% absolute bullish, 100%. Okay, this means that whatever bullish support market will be expecting or demanding, that bullish support will come through the Dow Jones, because Dow Jones is 100% absolute bullish. And other than that, the S&P 500 is 80% bullish on the weekly chart. This means that as of now, the trend, the long-term trend is bullish. There is no change in the long-term trend. Long-term trend is still bullish, no change. Okay, now this the condition, this very heavy condition, very heavy and very important condition. Okay, here if you notice, the MACD of the S&P 500, it is forming a bearish slip. Okay, what is this, the bearish slip? Bearish slip means that there was supposed to be a bullish crossover, but that crossover did not happen. Rather, it is continuing its bearish movement. Okay, now whenever the bearish slip is seen or is formed in the moving averages or in the MACD, then this see, it is not just about this the bearish, but any kind of slip, whether it is bullish slip or bearish slip, means a slip must be there. So either in the moving averages or in the MACD, whenever there comes a slip, okay, then this slip has the potential to trigger that kind of fall, sorry, not fall, but that kind of movement in the market. If there is a bullish slip, then we will see very heavy bullishness in the market, gap up open and 1-2% movement. If there is a bearish slip, then we will see gap down open and 1-2 or 3% fall. Okay, slip. Now one more thing that was seen yesterday, and this was very interesting, because on Thursday, okay, the stochastic RSI gave an actual bearish crossover. Okay, but then yesterday, when the movement of the market, when we have seen an unexpected gap up open and then open equal to low condition, so it was clear, confirmed that that yesterday on Friday the market was manipulated, and the only known reason for the manipulation was the weekly, monthly, quarterly, and the yearly expiry. So only reason to manipulate, okay, that the market was manipulated yesterday was to make sure that the calls and the puts, the options, okay, both the calls and the puts, okay, these options, okay, expire like at very negligible value, okay. So like more than $2 trillion or $3 trillion worth options, okay, expired yesterday. So this was the only known reason why the market was manipulated. Otherwise, there was no need to manipulate the market. Okay. Anyways, so but because of this, the manipulation yesterday, the bearish crossover that was there in the stochastic RSI. Okay. This bearish crossover in the stochastic RSI, this did not happen. Rather, the stochastic RSI is still holding in the bullish pattern, in this the bullish condition. This means that if in the coming week, if it remains bullish, goes bullish, okay, and the stochastic RSI remains bullish, does not gives any bearish crossover, in that case we will expecting the next week, the last week of year 2025 to be bullish, very heavy bullish, very good bullish week. Okay. However, at the same time, if there comes a bearish crossover in the stochastic RSI in the coming week on the weekly chart, okay, then the last week of the 2025 may go bullish, okay, but that won't matter much. But the most important thing is that, okay, from the last week of 2025, the market will into or come under a very heavy bearish pressure, that the new year can be seen like the beginning of the year we will see back-to-back red candles, okay, back-to-back red candles, fall we will see that kind of condition. So in order to avoid that condition, okay, the stochastic RSI must remain bullish, it must not support the bearish MACD, and soon the bearish MACD must also give, or must also get a bullish crossover. Once both of these conditions, MACD and stochastic RSI, are bullish, then market will be absolutely safe, okay, then there won't be any fear or anything like that, okay. So the weekly chart is indicating a long-term bullish trend, no change in that, the bullish trend. The only problem is the initial intraday, okay, movement, and also this condition is indicating that if all goes well, market remains under pressure, market fails to clear the significant levels, especially 685x, okay, if there comes no closings above 685x, it remains below 685x, in that case highly likely there will be a red weekly candle in the next week. Now this will be more clear through the daily chart. So guys, this is the daily chart, okay. Now before I discuss the daily chart, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And also, so far, if you have liked this video, then hit like to appreciate, and your appreciation matters a lot. Now the daily chart is very different. So first of all, daily chart means one candle represents one day, not 1 week or 1 hour. One candle means one day, okay. So the daily chart, the candles are very different. Let's first discuss the candle. Well, candle is heavily bullish candle, okay, even though it was manipulated, but still it is heavily bullish. That is why I mentioned that whether manipulated or not doesn't matter, but now that it has come into this condition and not going anywhere, and is trading in the open equal to low condition, okay, it will remain bullish, but the bullish side will remain restricted to or around 682x level. Even if it moves into the 683x, then also it will fall back to the 682x. So it will keep on trading around at or around 682x level. So because of this heavy bullishness, this candle is indicating an initial or intraday bullishness on Monday, but is not indicating or is not confirming a gap up open on Monday, okay. Now the Dow Jones. Well, Dow Jones, there is a very limited bullish candle, okay, after this a very heavy bearish cycle, and again in the open equal to low condition is indicating an initial or intraday bullish movement on Monday, but no gap up open. Now this is just opposite to what we have seen on the weekly chart. Weekly chart is indicating an initial or intraday bearish movement on Monday, but the daily charts are supporting an initial or intraday bullish movement on Monday, okay. So how this is going to work? So for this to happen, let's say if there comes a gap up open, okay, then what will happen? After the gap up open, okay, market will come down. S&P 500 will come down, Dow Jones will come down. It will come down, it will give a limited fall. Okay. Now, as long as it is the 682x level is there, it is holding, sustaining, and giving the hourly closings above the 682x, no problem. It will remain recoverable. Okay. However, if it loses, gives the closings below, then the fall. Similarly, if there comes a gap down open, okay, then also it will try to move up. It will try to move up towards the 682x. So in this manner, okay, either it gives a gap up open or a gap down open, it will remain heavily susceptible to test the 682x level. Okay. So this is through the candle. Now let's analyze the technical indicators. Well, technically S&P 500 looks weak on the daily chart. See, the S&P 500 has earlier, it was giving back-to-back closings, okay, within the moving averages or below the cluster of the moving averages. But now the S&P 500 has closed above the moving averages. So S&P 500 is bullish through the moving averages, the Bollinger Bands, Ichimoku cloud on the daily chart, and also the S&P 500 is bullish through the stochastic RSI on the daily chart and is bearish through the MACD on the daily chart. Neither overbought nor saturated. Yes, it hit the saturation level in the bearish side on Wednesday. So that was one more reason why we were expecting. Okay, so I have mentioned this in my updates to my Patreon community members, that because now the K channel is zero, it has hit the zero, so it is now under technical compulsion, okay, or it will get the technical support to get a bullish retrace. Okay, any kind of bullish retrace. Next day there was the bullish retrace, bullish movement, but this was the combination of the data and the technicals. Okay, anyways, now here the S&P 500 will be seen or considered as again 80% bullish on the daily chart. In case of the Dow Jones looks almost the same. Dow Jones is bullish through the Bollinger Bands, through the Ichimoku cloud, through the moving averages on the daily chart, and the Dow Jones is okay. Dow Jones is just bearish on the daily chart. It has just gone bearish on the daily chart. This is really bad for the market. Why this is bad? Because if you see, the stochastic RSI is also trading bearish. Okay, MACD is bearish, stochastic RSI is bearish on the daily chart. There is a bearish pressure on the Dow Jones, okay, on the daily chart. So in this manner, the Dow Jones is or will be seen as 60% bullish. However, there will be the bearish pressure through the MACD and the stochastic RSI in a manner that in the near term, whenever Dow Jones try to move up, okay, then it will struggle. Whenever it will try to move up, then it will struggle, and most likely it will have to fall. Okay, this condition will remain in the picture as long as the MACD of the Dow Jones is trading bearish. Okay, means as long as the MACD or the stochastic RSI both are trading bearish. Once any of these or both of these comes out of this condition and turns bullish, in that case this condition will be cancelled, and in that case the bullish side movement will be sustainable. So what we have seen here on the daily chart is that Dow Jones is more bearish as compared to the S&P 500. However, on the weekly chart, Dow Jones is more bullish as compared to the S&P 500. This means that in the long term, the market is bullish. The long term trend is bullish. There is no problem. There is no doubt about that. Or there is some fear that in the long term, okay, there may come a sharp and sudden fall. Okay, why? Because the MACD of the S&P 500 on the weekly chart is trading bearish. This fear of sharp and sudden fall will be through the MACD. Okay, now when it comes to the Dow Jones, in the near term, in the short term means Monday. Okay, just Monday, you can say only Monday, or the first half of Tuesday, you can say. That's it. Okay, in the short term, the pressure on the market in a manner that even if there comes a gap up open, it will come down. If there comes a gap down open, it try to move up, then again, okay, fall in this manner. But it will, all of this will depend on the numbers. Okay, the technicals will support, but not without the numbers. The numbers must work in this manner. So just like, for example, just like yesterday when it was clear that the 682x, okay, my members have asked me this question again and again, where it will be heading to, because it has gained heavily in the first hour. So where it will be heading to? So it was, answer was clear, 682x. Okay, and when it reached to the 682x, then also, so for more than 5 hours it was trading at or around the 682x, and this was very much clear, okay, in my all of my updates yesterday, that no matter what, even if there comes a little breach in the 683x, then also it will fall back to the 682x. It will trade around 682x. This was clear, and this is very much similar to what we have seen earlier on Wednesday. On Wednesday, that the Dow Jones is trading in the open equal to low condition. Okay, once it comes out of the open equal to low condition and S&P 500 loses the 676x zone, then it is coming down to the 672x no matter what. And this was mentioned very clearly in this the update. Okay, and yes, there was one more thing. When it comes down to the 672x, then what will happen? Okay, it was very simple, that when it comes down to the 672x, then it will hold. The fall will be there up to the 672x. That's it. Okay, then it will hold. Okay, what was the low on Wednesday? 6720. Anyways guys, so whatever is going to happen in the next week, in the coming week, I will keep you posted through these the daily precise updates if you have joined my Patreon community. And if you have not yet joined my Patreon community, then let me tell you, okay, that I give these daily precise updates every day from Monday through Friday to my Patreon community members. Monday, Tuesday, Wednesday, Thursday, Friday. Okay, multiple updates within a day. And that's not all, because I also give the opportunities in the premium stocks. Okay, 5050 to 8080, 50 to 80 opportunities on the monthly basis in the premium stocks and the ETFs. And that's not all, because I also give the midweek update. This is the video technical analysis given every Wednesday with the precise levels, numbers, movement, and everything. So guys, whenever you want to join my Patreon community, in order to get all of these, the daily precise updates, the midweek update, video technical analysis, and the premium opportunities, then I have given the link in the description of the video and also in the comment section. And when you follow that link, then you will see that this is my Patreon page and this is my Patreon profile. And here you will see this button. This button says membership options. When you click on this button which says membership options, then you will see that there are these the three levels, 3 tiers: level 1, level 2, and level 3. Level 1 and level 2 are same. The only difference is the geographical location. Level 3 is the S&P 500 updates and opportunities. And guys, if you notice, many people have joined my Patreon community for last many days, weeks, months, years, and they are getting these daily precise updates every day from Monday through Friday, as well as the midweek update, video technical analysis, and the premium opportunities, 50 to 80 premium opportunities. So guys, whenever you want to join my Patreon community, I have given the link in the description of the video and also in the comment section. You can follow that link and you can join my Patreon community. Now guys, I'm going to discuss the second point of the agenda of this S&P 500 weekly technical analysis. And here I will give you the probable movement. Probable movement means what is expected to happen in the S&P 500, Dow Jones, Nasdaq in the coming week, the week of December 22nd, means from December 22nd, which is Monday, to December 26th, that will be Friday. Okay, the probable movement. What will the conditions for the bullish bearish movement? What will the numbers, levels, etc.? Okay, all of these are things. So well, what we know is that Monday, Tuesday, Wednesday, Thursday, Friday. Okay, Thursday is holiday, Christmas, 25th. Wednesday the market will close early at 1 p.m. short day, half day. Okay, so only Monday, Tuesday, and Friday, these 3 days are there. Okay, so in this manner it will be a short week. Now historically, the whenever there we see the short week, this kind of week where only 2 days or 3 days are the working days, the short week, then most likely, not always, but most likely, like 85% or more than that, okay, it goes bullish. Okay, we see the bullishness, the bullish movement. Okay, in some cases we have seen that when it fails to go bullish, then it will give sideways movement for the entire week. Okay, Only in few cases we have seen heavy fall, heavy profit booking. Okay, heavy fall, but those are like less than 10% cases. Okay, so this is for the next week. Now in terms of the data, the Tuesday, only Tuesday, some the retail sales data and the GDP, this the last quarter data will be released. Okay, that's it. But because Wednesday and Thursday are like kind of holiday. Okay, because Wednesday the market will close early, so the impact of this GDP data or the retail sales data is not expected to be seen on the market as such. Because if the market react to this data and if the data is negative, see, if the data is positive or neutral, okay, then market will go bullish. So there is no question about that. If the data is negative and the market goes bullish, this means that on Wednesday and on Thursday the market will go bullish, will trade bullish. If the market gives bearish reaction, negative reaction, okay, in that case this means that now on Wednesday and Thursday most likely we are going to see the fall. Okay, so this was for the data and the week. Now in terms of the numbers, what we know is that as of now S&P 500 has regained the 682x. Okay, however, in order to confirm if the market, if the S&P 500 is going to sustain, okay, we need two consecutive closings above 682x level. This is the first closing. If on Monday there comes the second closing which is above the 682x level, okay, in that case there will be a condition. This condition will allow the market to remain bullish, to trade bullish, and the technicals which are now struggling, okay, in the bearish side will turn bullish on the Dow Jones, in case of the Dow Jones, and also in the S&P 500. When the technicals and when these turns bullish, okay, then this means that for the rest of the week the market, the entire market will sustain bullish. Even if there comes a fall, then that fall will be recoverable. This means that in the next week 682x will be very, very decisive in a manner that it will be the only number, it will be the only level that will define the bullishness and the bearishness. Because if there comes continuous daily closings above 682x, this clears that now the S&P 500 is in a condition to move to the 6,900 range. Okay, and if all goes well, then the last week of the 2025 or the first week of 2026, the S&P 500 can even hit the 7,000 mark. Okay, provided that there are continuous closings above the 682x and the S&P 500 recovers the 6,900, okay, by or before Friday. So this means that bullish side is open, okay, will be seen or will happen provided that there comes closings. Now because we are talking about the we are looking into this, the short term picture. Okay, so in the short term picture, continuous hourly closings above the 682x will further confirm that the S&P 500 has again come back into its comfortable bullish condition and most likely is going to close above the 682x. And it closes above 682x means that there are two consecutive closings. It is now heading to the 685x. 685x is the next hurdle, okay, that it will have to clear and to recover the 685x. Once 685x is recovered, okay, then comes the 687x, then it will have to recover the 687x. Okay, now recovering 682x and 685x is fine. Okay, it can do that in 1 to 2 days or 2 to 3 days, fine. But when it comes to the 687x, then it will struggle, because there are some conditions at the 687x that will not allow the S&P 500 to move and to move heavily, okay, without respecting the 687x. In that case, it will be forced, it will be compelled to move, okay, to struggle around the 687x. And once it struggles around 687x, remains around, struggles, then in 1 to 2 days it will be able to clear the 687x. Once the 687x is recovered, then the 6,900 will be there without any problem. Okay, Now so this will be very much clear, okay, by the time I give the midday update on Monday, okay, whether there is any chances, whether there is any potential in the market to recover or to go for the 6,900 in this week or not, okay, because by that time, okay, there will be three hourly closings. These three hourly closings and the patterns of the candles will tell us, okay, a lot about the bullish or the bearish movement. Okay, fine. The problem will happen if there comes the closing below the 682x, because the S&P 500 has struggled heavily, okay, and then recovered the 682x. Not just struggle, also it was manipulated. So but if there comes a closing below 682x, especially on Monday, if the closing is seen below the 682x on Monday, in that case it will come under pressure or come into a condition wherein we will be expecting fall. This fall will then not just be limited to like 1 day or so. This fall will be then extended for 3 to 4 days. Okay. Now why that will happen? Because once there comes a confirmation that S&P 500 is going to close below the 682x, then this means that most likely it is also going to lose the 6,800. See, on Monday, on December 15th, okay, S&P 500 came down and the low was 6801. Low was 6801. It did not test or lost the 6,800, right? So because of this movement, see, the same was there on Friday. Friday also there was the low was 6801, and then on Monday the 6801 on 2 consecutive days. Okay, it sustained. However, on Monday the closing was below the 682x. It was 6816. That is why I am saying, if there comes a closing below 682x, then the 6,800 won't be, so it won't matter much. Yes, intraday S&P 500 may show reluctance, hesitation that it is not going to lose, but eventually it will have to lose. Okay, and in order to make this matter worse, see, there is a closing. I'm talking about a case wherein the daily closing is below 682x, right? Now, when the closing is further confirmed that the closing is below the 6,800, it was below 682x, fine. Number one. Number two, it closed below 6,800. Number two, both of these conditions mean that there is very heavy pressure on the S&P 500, and the S&P 500 is struggling. Clearly, it can clearly be seen that S&P 500 is struggling. Why and how? First, it came down, entered into the Ichimoku cloud here in the last week of the November. Okay, the third and the fourth week of the November. Then it again came down, closed inside the Ichimoku cloud. Okay, although then it was pushed, and then yesterday on Friday it was pushed. Okay, heavily. Okay, through this the manipulation just to make sure that calls and puts, okay, expire worthless, because more than $3 trillion were on stake in the options. Okay, so anyways, so once there comes a confirmation that market is weak, in that case the S&P 500 will be coming down. Now when it will be coming down, then it will be coming down to what? This time it will not stop at the 672x. It will not stop at the 672x for like 4 hours, 3 to 4 hours. It will stop because 672x is heavy. Okay, definitely. But 672x will not be the absolute support level wherein we can say that there will be a reversal for sure. No. This time when it comes down, it will hold for some time at 672x, will show some reluctance, and then eventually it will have to come down again. So in short, it will create a cycle. Okay, what kind of cycle? It will create a, let me show you. Okay, this kind of pattern we will see. It was coming down, moved up, and then it is coming down, then it will move up, then it is coming down. In this kind of staircase pattern we will see here. Okay, so that is why I'm saying that when it comes down, then this time it will lose the 672x and will be further, then it will enter into the 6,600 range. This is the reason, in order to support this, the manipulated movement that was seen on Friday, this very heavy unexpected open and then the open equal to low condition, the S&P 500 and the market, the entire market must must further be supported so that it can sustain and remain and can close above the 682x, because only when there comes two consecutive closings above 682x, then only this will come into the technical condition. S&P 500 will come into the technical condition wherein we will be expecting bullishness without any need without any need of the manipulation. Then the technicals will work in that manner. Okay, so yes, there is one more thing, that it is not just about the S&P 500, but also the Dow Jones will play a major role here. But guys, before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And so far, if you have liked this video, then hit like to appreciate, and your appreciation matters a lot. And if you want to join my Patreon community in order to get the daily precise updates every day from Monday through Friday, as well as the premium opportunities, then I have given the link in the description of the video and also in the comment section. Now, in terms of the Dow Jones, what we know is that Dow Jones is weak or weaker. On the daily chart, Dow Jones is weaker. Dow Jones is weaker as compared to the S&P 500. Okay, means Dow Jones is in a condition to give up more and more, right? But how and when the Dow Jones can sustain? For the Dow Jones to sustain, this is the mark. This is the previous all-time high, that was 48,431.57. 48,431.57. Okay, so for the Dow Jones to come into the comfortable bullish condition, Dow Jones must clear, sustain and close above the 48,431.57. Now, why this is required? This is needed because even if there comes closings above the 682x, even if there comes the closings above the 685x, okay, but at the same time Dow Jones is struggling and Dow Jones is not giving closings above the previous all-time high. In that case, there will be a fear, and most likely or highly likely we will see fall in the Dow Jones will trigger heavy fall in the S&P 500, either from 6, okay, means wherever it will be at that time, we will see that fall. In that case, the 682x will be able to hold for a couple of hours, but not for the entire day. And once the 682x is lost, then again the bearish cycle will continue. Okay, that is why it is required that the Dow Jones must also recover, must make use of this opportunity. This is a short week, only 3.5 days of trading. This is a short week, so Dow Jones must also make good use of this opportunity, should trade bullish, should recover and should sustain and close above this the high. Okay, because once this condition is seen, then the Dow Jones, Nasdaq, these indices are free to trade bullish, free to trade. S&P 500 will then come into the condition to enter and to sustain into the 6,900 range without any problem. Okay, because the only problem as of now is only through the Dow Jones. And once the Dow Jones start to support the bullish movement in the market, then it will be the bullishness in the entire market. It will be the bullishness and only the bullishness and nothing else. Okay, but failure of the Dow Jones means it is problematic. Failure of the Dow Jones means S&P 500 will lose the 682x, support of 682x, and then it will be coming down, and then we will be expecting 6,600 range. Second time it might not be able to hold in the 6,700, because it will then enter into the Ichimoku cloud, closing will be inside the Ichimoku cloud, and then most likely it will exit in the bearish side in the Ichimoku cloud, and the year of 2026 will start with the bearishness in this particular case. But if all goes well, all remains well, market goes bullish, Dow Jones goes bullish, S&P 500 goes bullish, then the year 2026 we will see okay, there will be very, very heavy chances. I am not saying 100% confirmation, but there will be very, very heavy chances that before 15th of January, S&P 500 might hit the 7,000 psychological mark, if all goes bullish, if all goes well. Anyways, whatever will happen, I will keep you posted through these daily precise updates of the S&P 500, Dow Jones and Nasdaq every day that I give to my Patreon community members every day from Monday through Friday. So guys, hit like if you have liked this video in order to appreciate, and your appreciation matters a lot. And guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And guys, if you have any questions that you want to ask, then please feel free to ask your question through the comment section.